As even conservative networks and publications like Fox News and the Wall Street Journal are reporting, the markets opened this morning in total free fall as a direct consequence of Donald Trump's disastrous global tariffs and trade war. But despite the pressure, despite the economic consequences and catastrophe, Trump himself is publicly doubling down on his disastrous strategy. But before we unpack all that, if you end up liking this video and you want to support the channel, please be sure to hit the like, subscribe, and alert bells before you go. All right, friends, I got to treat you to a montage of the disastrous news, if you haven't heard already by now, courtesy mostly of Fox News, and we're going to look at some Wall Street Journal writings on the topic. But yeah, we are once again looking forward to at least another week of total economic calamity because of Trump, and he's doubling down.
Going down, we're off 1,090 points on the Dow Industrials. You're at 37,200 now, and the entirety of the Dow 30, with one exception, top left-hand corner there, there's one winner. The rest are down, reading across the board. S&P 500, that has opened with a loss of 160 points, 3.3%. The Nasdaq Composite down 600 points. That amounts to, what is it, 3.94%. So we're still talking in percentage terms, still talking about a major league sell-off. Big tech, I would imagine every single one of them is down. They are. Microsoft, Alphabet, Meta, Amazon, Apple, down. Microsoft, by the way, is about 100 points below its high.
Not good. That was Stuart Varney, the British host of Fox News Business, or one of their Fox News Business hosts. Got two more clips.
Fox News Alert, 3 minutes into the open of trade here in the U.S. markets. The Dow is out of the gate down about 1,250 points. That's just more than a 3% sell-off there. The overnight trade was indicating that we would see selling on the open this morning, although it does look like the selling picked up a little bit. It is likely to be a volatile session indeed.
Putting it mildly. One more clip to really set the stage. And again, we're going back to Fox Business host Stuart Varney for this one.
First, the good news. Earlier this morning, we saw a very heavy selling. It continued. Dow futures down more than 1,000 points. We've come back a little from those lows, but we're still seeing plenty of red ink. Tariffs getting the blame. Look at this. The Dow Industrials probably opening over 700 points lower, but that's a half hour away. All kinds of things change in a half hour. The S&P down 100, Nasdaq's down about 400 points. Look at Bitcoin. That's down to the $77,000 level as we speak, not playing the role of safe haven at this moment. Now, some of the biggest names on Wall Street are clearly getting anxious. Billionaire Bill Ackman says if the tariffs stay in place, we face an economic nuclear winter. Banker Jamie Dimon says tariffs will slow economic growth. Fed Chair Powell has said tariffs will bring higher inflation. First, the good news.
So we're going to do a separate video about Jamie Dimon and Bill Ackman in particular, because they are two Trump supporters who are now publicly freaking out, and that, quite frankly, for various reasons, merits its own video. But you get the picture. Okay, the fact of the matter is we had a disastrous week last week as a direct consequence of Trump's global tariffs and trade war. This week is looking no different. And you might be thinking, okay, well, in the face of this economic calamity, maybe Donald Trump will back down. Maybe he will see reason. Doesn't look like it. I want to show you two Truth Social posts, one from late last night and one from this morning. The first one from last night is, the United States has a chance to do something it should have done decades ago. Don't be weak. Don't be stupid. Don't be a panicking, a new party based on weak and stupid people. Be strong, courageous, and patient, and greatness will be the result. I'm sorry, that's the tweet from this morning. Again, stunning and tone deaf when you consider the fact that people's 401ks have been vaporized, people who are on the cusp or were on the cusp of retiring, who probably won't have the opportunity to rebuild their savings, rebuild their retirement, have just been totally vaporized as a direct consequence of Donald Trump's stupid, reckless, unacceptable outcome, or unacceptable actions, and people's college funds as well. Parents who have saved diligently to put their kids through college because we don't have free or affordable college in this country. That's also been vaporized as a direct consequence of Donald Trump's decision, and there was no need for this. It's not like we were just coming off the heels of COVID where the chief executive had to make tough decisions. Donald Trump took a bull market and created a bear market as a direct consequence of this. He just drove it into the ground because he has a fundamental misunderstanding of trade deficits and conflates them with tariffs or conflates them with just terrible economic circumstances. Then he wants to use tariffs to solve this issue, which really isn't an issue whatsoever. It's predicated on a fundamental misunderstanding of macroeconomics, and he doesn't care. This is the post he made from last night. We have massive financial deficits with China, the European Union, and many others. The only way out this problem can be cured is with tariffs, which are now bringing tens of billions of dollars into the USA. They're already in effect and a beautiful thing to behold. The surplus with these countries has grown during the presidency of Sleepy Joe Biden. We're going to reverse it and reverse it quickly. Someday, people will realize that tariffs for the United States of America are a very beautiful thing. The evidence sits squarely on the opposite side of that. So, let's take a look. Wall Street Journal, sister publication of Fox News, a conservative outlet. Again, I like to refer to them as much as I can because liberals and progressives carry no currency with the MAGA Republican movement. It's a cult. They don't take us seriously because they are a cult. So the only potential source of credibility that might penetrate that cultishness is another conservative outlet, right? So as the Wall Street Journal reports, markets swing wildly after Trump holds his ground on tariff plan. The S&P 500 briefly hits bear market territory and oil falls. Trump stands firm despite alarm on Wall Street. U.S. stocks whipsawed as investors scramble to predict what Donald Trump's aggressive tariffs will mean for the economy and corporate profits, and whether the levies are here to stay. Quote, what's going to happen to the markets? I can't tell you, Trump said late Sunday. Quote, I don't want anything to go down, but sometimes you have to take medicine to fix something. Stocks opened steeply lower. Then they surged briefly in morning trading as investors latched onto reports that the Trump administration could consider a 90-day pause on tariffs, only to fall back once the White House shot down the idea. So to be clear, the White House said it was fake news, the idea that that Donald Trump would pause these tariffs for 90 days. The investors and the private sector are looking for some sort of glimmer of hope to cling to, and they refuse to do so. The White House, that is. The broad S&P 500 index stood close to bear market territory, often defined as a 20% plus decline from a recent peak. The tech-heavy NASDAQ composite had fallen into a bear market last week. Wall Street's fear gauge, the VIX, leapt as investors braced for further volatility ahead and global markets recoiled. Treasuries were volatile as investors considered how tariffs could slow short-term growth and rekindle inflation, complicating the task of the Federal Reserve. Futures prices showed traders stepping up bets on multiple rate cuts this year. Early Monday, Trump renewed his call for the Fed to ease policy and said his policies were bringing down oil prices and interest rates. U.S. stocks lost $6.6 trillion in value during a two-day washout last week after Trump announced larger tariffs than Wall Street expected, and China said it would match the duties on all U.S.-made goods. Yikes, not good. So the Wall Street Journal editorial board as well. They published, they have nothing today. I'm sure they're going to be dropping some stuff later on today, but the conservative Wall Street Journal editorial board published this yesterday. Canaries in the Trump tariff mine. Market signals are warning the White House of trouble ahead. This is yesterday. Futures markets on Sunday were signaling more market carnage on Monday after 2 days of extraordinary declines. Normally, you'd expect some rebound, even if it's a dead cat bounce after such a huge sell-off, but there are canaries in the tariff mine that are warning of economic trouble ahead. One canary is the biggest sell-off in the junk bond market since 2020, the pandemic year, when Trump was presiding over a COVID-related recession. The premium that investors demand for holding high-risk corporate debt rose a full percentage point to 4.5% late last week after Trump's tariff assault, according to the ICE Bank of America index. At a minimum, this is a sign that investors are hedging their bets on the economy. At worst, it's a signal of fear that the tariffs and their consequences could trigger defaults. Treasury Secretary Scott Bessent wanted a lower yield on the 10-year Treasury note, which he now has. But that yield can fall in anticipation of slower growth as much as from lower inflation. We hope someone at Treasury is paying attention to the corporate debt market. A second canary is the flight from the U.S. dollar. Typically, times of uncertainty lead to a flight to safety, which usually means U.S. dollar assets. This time, the dollar has fallen against the euro, the yen, and the British pound. The dollar rebounded some Friday, but further dollar weakness could be another bad omen. A third canary is the shift across Wall Street on recession risks. Our friends at Everscore ISI see the tariffs as, quote, a substantial drag on growth. They've reduced their GDP growth estimate for the year to 1% and raised the probability of recession this year to 40%. JP Morgan's economists now predict a recession, albeit a mild one, at minus 0.3%, with the jobless rate rising to 5.3% from 4.2% in March. More or less every economist not working for Peter Navarro in the White House has lowered their estimates of growth in the wake of Trump tariffs. This isn't the boom Trump promised working class voters. The Wall Street consensus has been wrong before, and nothing is foreordained. Trade retaliation could be less than feared, and Trump could change course, but policymakers ignore market signals at their peril. And it seems that is precisely what Donald Trump is doing, doubling down on this disastrous, reckless, and totally unnecessary policy. And again, since it's here to stay and nobody can force Trump to undo what he's doing, Democrats, elected Democrats, their surrogates, liberal and progressive influencers need to be pouncing on this and making sure that the American people draw the direct connection between Trump's recklessness and the economic catastrophe. Don't assume facts speak for themselves. Make the case and make it persuasively and relentlessly. In the meantime, let me know what you think in the comments.